Leveraged ETFs are a version of an ETF that gives a enhanced return equal to a leverage factor, and the leverage factors tend to be -1 times, 2 times or 3 times, up to 5 times. But if you take, for example, the FTSE 100 and you traded the 3 times leveraged product, if the market goes up by 2% in a day, you'll get a 6% return. So what that essentially allows you to do is have different strategies within the portfolio. You can enhance returns, so you can use the same money to gain 3 times the exposure, or you can use a third of the money to gain the same exposure as if you put a straight Delta One trade onto the market. The advantages are that it trades as a share, so you can get very simple access through the stock exchange if you've got a brokerage account with any retail broker. So you get very easy access. They're relatively cheap. They tend to be around 60 to 80 basis points on an annualized basis, which is 0.6 or 1% per year, which means that if you hold it for one day, you'll pay 365th of that. And because it trades as a share, you can also hold it in your equity account, which includes SIPs and ISAs, which are very, very straightforward for investors to use. The market globally is about $70 billion in short and leveraged ETPs. In Europe, it's about 10 billion. So it's a relatively small market compared to the overall ETF market, which is about 500 billion in Europe, but it's growing at a very rapid pace. In fact, it's growing probably a bit quicker than the overall ETF market. They're performing pretty well. I mean, they do what they say on the tin. So if the market goes down, they go down. If the market goes up, they go up. So obviously it amplifies the return. So you not only get the ability to enhance your returns if you get the trade rise, but you also get the ability to lose more than money by amplifying the losses if you get the call wrong. So really it all revolves around whether the client gets the trade right or wrong at the end of the day. But I think that where the growth is really coming is people's attitude towards ETFs generally, and seeing them as a great tool to access asset management exposures. And given that they've not had the ability to leverage those until now, you know, people are taking that on board very, very quickly. Well, they are a much more of a specialised product. So what I would say is that it's really important that investors understand what they're trading before they actually trade it. So I wouldn't say it's for the common and garden investor. You know, it's certainly for the more sophisticated investor who can understand the returns that they're getting, but also can actually bear the losses that they can potentially get by having the leverage in there.